Hello, welcome to another weekly Outlook video. If you're new, welcome to the community. Subscribe to this channel. We trade ICT SMC concepts and I do weekly Outlook videos every Sunday. We're going to look at DXY, GBPUSD, EURUSD, GBPJPY, gold, and NAS 100. So as usual, we're going to start with the dollar index. So dollar index is literally the dollar. If you trade major pairs, you need to make sure that you follow the dollar index because it's a leading indicator for all major pairs. So now we're going to start with the monthly time frame. For the past 2 weeks, we've been at a point where we did not really have a clear bias. And so far, I want us to start from the monthly time frame so we can really see and try to get the best clear bias for this week. Now, if you look at the dollar, of course, the dollar has been weak. We had this lower low. Then for a minute here, for a moment here, we had all this consolidation. And so far, this is what price did the month of January. And if you look at this clearly, you can see there's an inversion fair value gap here, which was tagged January, tagged the inversion fair value gap, and you can see the inversion fair value gap was used to push price lower. So now February, we still have 12 days left before this candle closes. And if you look keenly, also you can see there's an order block here, which price has already tagged. So clearly, if we look at just this price action here and the order flow here on the monthly time frame, this is a clear bearish order flow. And if we look at this side on the monthly time frame, you can see we still have a lot of sell side liquidity. You can see we have this sell side liquidity and this sell side liquidity. So these are like relative equal lows right here. So if the dollar is still weak, I'm looking at this sell side liquidity as potential target. But of course, the first target is previous month low. So if we look at the weekly time frame, again, you can see the order flow is so clear. You can see this market is made a low, made a retracement, lower low. Price took out all these lows, swept that low, this retracement here to an internal range liquidity. You can see there's this weekly fair value gap, which price tagged. And from there, you can see now price last week, we had all this bearish week. Now, if you look keenly, you can see there's an order block here that has been created by price. So this right here is an order block. So already there's a bearish order block. And if this market is will still continue with this bearish order flow, then this weekly order block is a good level that the market can use to push price lower. So if we look at the daily time frame, again, you can clearly see that bearish order flow. So if you take a fib and measure from this high to this low, clearly you can see this looks like a very nice retracement to the premium of the range above 50%. And then at this point, if the dollar is still weak, this can be a good point. This can be a good retracement that we can anticipate more bearish moves from. So right now, if you look at this range here, you can see there's this fair value gap here. So and the weekly order block is right here. So if the dollar is still weak and we're still going to get this bearish momentum, then this is a good level. This is fair value gap. Already price has tagged this fair value gap clearly, and the weekly order block is here. So we can still have one last tag of this daily fair value gap, and then we get that bearish move, or we just open the week and we get a bearish move. But again, if you look at down here, you can see there's a bullish fair value gap right here. So if this market inverts this bullish fair value gap, that is the first confirmation that the dollar is still weak and we're likely to see more bearish momentum. However, if the market inverts this fair value gap here, then at that point, that is the only time I'd be thinking of a bullish dollar. So now let's look at USDCHF. So USDCHF and the dollar index are positively correlated. So this is the weekly time frame. If you look at the weekly time frame, you can see there's this fair value gap here, which was tagged by price last week. And then also the week of 2nd Feb, that is the week that tagged this fair value gap here. Then this week that just ended, you can see we had a bearish move and price has even formed an order block here. So if this market is going to open from the high, It can be nice if the market gets to this order block, and then it can be used to push price lower. So if we look at the daily time frame, you can clearly see this is the weekly order block right here, which you can see is at the same level with the uh, fair value gap here, bearish fair value gap. So already price has tagged this bearish fair value gap. So also there's a possibility that we can just open and we get all this bearish move, or we get a retracement for price to tag this weekly order block and tag this fair value gap one more time before we get that bearish move. So there's that. Now, if the market inverts this fair value gap, which also you'll see with the DXY literally is the leading indicator, so you'll know if price inverts this, then at that point you can anticipate a bullish dollar. So which means also a bullish USDCHF. So let's look at GBPUSD. So GBPUSD and the dollar index are negatively correlated. So if you look at GBPUSD, you can see first of all that there's high retracement, higher high. So this is a weekly fair value gap which got tagged here. So on the daily time frame, I can clearly see, of course, there's this fair value gap which was tagged by price, and so far this is where price is. So if you look keenly, you can see there's this order block here, and right now we have this inversion fair value gap. So this inversion fair value gap is the important key level. If the once the market inverts this, that is enough confirmation. So invert it one more time. So when an inversion fair value gap is inverted, we're going to call it a reclaimed fair value gap. So it becomes a fair value gap because the market has reclaimed it. So it's now back to doing what it was supposed to do, because you can see it was initially a bullish fair value gap. Then at that point, that's what you expect to see. So let's look at EURUSD. You can see EURUSD, this is the weekly time frame. You can see the market made this high, swept these, and we had all this bearish momentum. So last week, you can see after price tag this weekly fair value gap, an order block was created. So if this market is bullish, this order block can be used to push price higher. So let's look at the daily time frame. So if you look at the daily time frame, you can clearly see there's this high, a retracement. So this is a fair value gap here. All of this is a fair value gap, and the weekly order block is right here. So for bullish Euro USD, you want the market to use this fair value gap to push price higher. And also you can have one more touch of this weekly order block before you have that bullish move. But the point is, this bullish fair value gap is what is important for Euro USD. However, if the market inverts it, then at that point, of course, you'll expect a bearish Euro USD. So now let's look at yen basket. So yen basket is just the yen, and we're going to start with the monthly time frame. So if you look keenly, you can see, of course, first of all, this was 2024 low, which was swept by price last month, January. And you can see February again, one more time, price got to this low, and this is what we have so far. So this yen basket, if you've been following keenly for the past few weeks, we have actually been wanting to see a retracement, because we want to see the market retrace before we have more bearish moves. Because even if this market is bearish, honestly, the market cannot just go bearish one direction. We need to see a retracement. And most of the time when you have a market that is bearish, really literally really bearish with no retracement, at that point that market is considered cheap. That market is at a discount. So you don't want to continue selling at a discount. Normally the best place to sell from is from a premium price level, and most of the time you get your premium levels when the market gives us a retracement. And so if you look at the monthly time frame, you can see there's this fair value gap here which we had marked, and there's also this tiny fair value gap here which price currently is actually tagging. But for me, I'm watching this fair value gap. If we take a fib and measure from this from this high to this low, you can see 50% of this range is actually on this fair value gap here. So personally for me, if you're going to have this retracement, it would be nice if actually this market gets to this monthly fair value gap. Then from here, either it's inverted, we continue seeing more bullish moves, or it will be used now to push price lower. So let's look at the weekly time frame. So if you look at the weekly time frame, let me show you something, guys. So anytime you see price, first of all, when you're having a swing low or a swing high, and the market actually closes, we run that swing high or swing low, and you get a body closure below that swing low, then the next candle is the opposite. You get a strong opposite candle. In this case, you can see you have a strong bullish candle to the opposite side, because this was bearish, strong bearish close like the other week. Then this week you get a strong bullish close. Most of the time, especially if you're anticipating a retracement or a reversal, this is a good sign. So let's look at the daily time frame. So on the daily time frame, you can clearly see you had all these run up, and so far price has left this and fair value gap, and also we have this fair value gap. So for bullish moves, we want to see price retrace to this fair value gap, and you can see this fair value gap is in line with the weekly order block. So this is a good level. If we still get more bearish moves and and price tags this fair value gap, that is still okay. That is still permitted before we see that bullish move. But generally this week for yen, I'm anticipating a bullish yen. And if you're expecting a bullish yen, that means the yen pairs that you trade, like for example GBP, JPY, Euro JPY, you should be expecting the opposite, because they are inversely correlated with the yen basket. So let's look at GBPJPY, and we'll start with the weekly time frame. So clearly you can see last week had all this drop, GBPJPY. So this right here is an order block, and you can see price has inverted this fair value gap here on the weekly time frame. So it would be nice to continue with this bearish order flow. You want the market to retrace, use this inversion fair value gap to push price lower, or you can see a deeper retracement to this order block before you get that bearish move. So let's look at the daily time frame. On the daily time frame, you can see we have this fair value gap here, and you also have this fair value gap. So either price get a retracement, price will use this to push price lower, but it would be nice if we get that deeper retracement to this fair value gap and also to this order block here, because that will be if you get a fib from this high to this low, that will give us 50% of the range. You can see. So let's look at gold. If you look at gold, you can see gold has been bullish, all-time highs. It's been rallying higher, higher, higher. So there's this weekly fair value gap which was tagged, and so far this is what we have for gold. So on the daily time frame, clearly you can see this is what you have. This fair value gap. So this is a fair value gap we marked last week. So if price inverts this fair value gap, then there's a high probability that the market is likely to use this for more bullish moves, and I'll be looking at this buy side liquidity here and final this buy side liquidity right here. However, if the market fails to invert this, then this can be used to push price lower. So if you're going to see low moves or bearish moves for gold, then this sell side liquidity would be a nice low that the market can go for. So let's look at NAS 100. We start with the weekly time frame. If you see the weekly time frame clearly, or of course last week bearish, and you can see we had an open high price tag, this order block, and finally we had all this drop. So at this point, just by looking at this, and remember with this NAS 100 is in some sort of a range. So at this point, I'll just look at more bearish as a high probability, just based on the kind of order flow that we have right here. So on the daily time frame, you can see here we have that retracement, and this low is this fair value gap right here. So if this market is still going to give us more bearish moves, this is a nice level that the market can use to push price lower. So that is all I prepared for this weekly outlook video. If you enjoyed this video, don't forget to give it a thumbs up. I'll see you in the next one.